What's up everyone, welcome to Stockton. It's a pleasure to meet all of you. On this channel, we talk about stocks before they start blowing up, say goodbye to chasing stocks at all-time highs, and say hello to making some money. So if this sounds like something you want to take advantage of, then hit that beautiful subscribe button and like the video. Now let's get to it. Before we get into the video, I have to say that I'm not a financial advisor. Anything I say is just my opinion and is for entertainment purposes only. Having said that, if I'm talking about a company, I'll let you know whether I'm personally going to invest in it or not towards the end of the video. But you should always do your own due diligence, so with that out of the way, let's get started.
Hi guys, today we're talking about a small cap company that was brought public via SPAC recently. The company we're talking about today is HIMS and Hers Health Inc. Ticker symbol HIMS. Yesterday, ARK Invest showed an interest in this company by buying 460,000 shares at a market value of approximately $7.6 million. Frankly, I had never heard of this company before, and I only found out about them yesterday when I saw that ARK Invest had added the stock in their ARKG fund. It goes without saying that whenever Cathie Wood buys a stock, the whole world pays attention. So going forward, you can expect that this company will start getting a lot of eyeballs. So now let's dig a little deeper and see what this company actually does. HIMS is trying to disrupt the primary care market by providing an unparalleled healthcare experience. They're providing an enhanced level of healthcare by focusing on these 5 key metrics. Through the telehealth service that they're providing, they're reducing the average time it takes to get an appointment. So you can get a consultation within an hour instead of weeks or sometimes months. Now this second part is really important. Whether you are insured or not, it's going to cost you $39. That is it. If you go the traditional route and physically go and see a doctor, you're going to get charged $200 or more. You also get 24/7 healthcare because everything's online and you're not limited to fixed working hours that doctors or nurses might have. Someone will always be online to help you. It's also stigma free, which makes sense. Some people feel embarrassed to go to the doctor for whatever reason, and online consultations removes that stigma for most people. And then they talk about the potential for greater personalization. Since all of your records are kept digitally, they're able to provide a more personalized level of care as opposed to a one-size-fits-all approach. In my opinion, all of these metrics that they've mentioned are pain points that currently exist in the healthcare industry. So if they're able to execute here, you'd imagine that a lot of people would opt for their platform rather than going for a more traditional route, which is going to see a doctor physically, which takes longer, is more expensive, less accessible, and less personalized. Now this slide should give you an idea of how popular their platform really is. So this, I think, is incredible. Since their launch in 2018, they've had 2 million plus telemedicine consultations. The number of consults have nearly doubled every year since they've launched their platform. What's amazing about this is that if you compare this with Teladoc, they took 13 years to get to 1 million consults, and Teladoc currently occupies the number 1 spot in the ARKG fund. So clearly this is a massive achievement by HIMS, and these numbers indicate that the future looks bright for this small cap company. In a world where anxiety levels are through the roof, a lot of people are talking about how important self-care is. You also have to keep in mind that with COVID still being a big part of our lives, a lot of people are scared of going out too much. So if you can get a consultation online that only costs you $39, it makes perfect sense to opt for this as opposed to going out physically and paying more money. Another thing to note here is that they're targeting those diseases or conditions that are common in our society and those that can easily be resolved via telehealth. So these are the sort of things that they're focusing on to start with. I feel like a large proportion of consults will be based around the mental health aspect, but some of these other conditions are also quite prevalent in our society. The next slide that I want to show you here gives us an idea of how the customer experience has been like so far. A Net Promoter Score of 65 is extremely impressive. NPS stands for Net Promoter Score. It's a customer satisfaction benchmark that measures how likely your customers are to recommend your business to a friend. An NPS of 50 and over is considered excellent. So an NPS of 65 is really good, especially when you compare this with the NPS of traditional healthcare providers, which stands at 9. What this means is that people who use HIMS are more likely to recommend it to their friends or family members, so a good NPS score basically acts like a free yet really effective marketing tool. Right, so now let's take a look at the total addressable market that they are targeting. So they provide healthcare services through their telehealth platform that target hair loss, erectile dysfunction, anxiety, depression, and dermatology. This makes up a total market cap of $65 billion, which is massive. And what's interesting is that all these areas have stigmas attached to them, and not everyone is comfortable going to the doctor with these problems. In my opinion, telehealth serves as the perfect option for these patients that have these issues. What I like further about this company is that they are expanding their services, which means that their total addressable market is likely to grow further. As you can see here, they can actually further expand their total addressable market by $100 billion, which is huge. So now let's take a look at their financials. They've had massive revenue growth since their inception, 128% revenue CAGR from 2018 to 2020. They also have a 71% gross margin, which is amazing. These bar charts provide a good illustration of how their revenue growth and gross margins have increased over the years. As you can see, they've done remarkably well in both of these departments. This slide here is really important as well. As you can see, the cost to acquire a new customer has continued to decline over the years and cumulative revenue per customer has increased, which means that they can get to profitability fairly quickly. When you take a look at their historical and projected financial summary, you'll find this stock very compelling. The revenue growth over the years has been really impressive, as I mentioned before, and they've consistently improved upon their gross margins. But one thing that strikes me as a bit odd is that their 2020 and beyond projected revenues are slightly lower than you would expect. Since they've done so well historically, you would imagine that the forecasted figures would be higher. But maybe they're just being a bit conservative here, but that's something to keep in mind. So now, what am I doing with the stock? Well, I plan on starting a small position to start with, as I expect a pullback is due. I'll look to buy the stock in 2 batches so that I can improve upon my average if the price does fall. I feel telehealth is definitely the future, and this company has been executing on their business plans really well so far. It also gives me more confidence that ARK has also invested, which means this company is likely to get more and more attention in the days and weeks ahead. Anyways, that's it for today. I hope you enjoyed this video. If you did, please give it a thumbs up and subscribe to the channel. Have an awesome day, and I'll see you in the next one.